Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream Monday through Friday, 11:30 to 1 p.m. Standard Time, and this stream is about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. The idea of this stream is to help traders understand how the market works, why it does what it does, and how at times you can get in alignment with it with structured trades that are available to everyone in the Bookmap Discord Trader Lab community. The idea of structured trades is to, as they say, give traders a leg up as they begin to develop their own trade plans. The business of trading is really a statistically based business. We operate in an environment that's 100% random. So we need to recognize opportunities that are in alignment with developing market structure. And of course, the thing about the market is it's always changing. So it is not a passive endeavor. However, it is a random one. So the idea of operating in randomness is to have anchored inputs that gives us a statistical edge. The other thing that's really important to understand is it's kind of like waiting for your bus or, whatever. If it doesn't fit, if you haven't vetted it, you don't have a trade. And for many of us, it's pretty difficult to sit back if we see market movement, yet we don't have a way to get in. And that tends to trigger emotional responses that cause us to chase the market. And typically those outcomes are not very good. If not on a one-off basis, if they are good on a regular repetitive basis, they are a ticket to leave the business, in my opinion, at least from my observations. So what we attempt to do in this stream, and my objective in creating the Trader Lab for developing traders, is to give them a footprint or basis of building out the business of trading, building trading plans, knowing when to interact with the market and take risk, understanding risk management, the important aspects of this business, and then they can go from there. We all have to survive the development process, and depending where you are in your development, you might want to start at with a structured plan so you can develop discipline, extract metrics, and only interact when you have a statistical edge. Remember, your job, if you're sitting in front of the market, is not to keep busy. It's to wait for your trades. And if you don't have a trade, your job is still to wait, because trades will show up. It's a matter of not feeling that you're missing something. Because if you're missing random behavior and impulses, you're actually missing something good. Now, I want to remind everybody that this is rollover week. And typically, most of the volume will shift over by midweek, Wednesday, Thursday. We're in the process of rollover. So I am quoting the June contract. That's ESM for the ES 25. Some of you may still be trading the March contract, which is fine. Most of the time, I do not trade the rollover the first day, at least, of the June contract. I will continue in the March, but for the stream here, and because I use Investor RT, which rolls over, I just roll, and I don't worry about it from there. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room, but if we get into real time, we'll talk market structure. In addition, this stream is based on the structured trades. They're available to everyone in the Bookmap Discord Trader Lab community. You can access that if you're in YouTube. There's a link down there. Also, these streams are available for review. Plus, there's a library of webinars and a PDF of 60 structured trades, or 60 PDFs, I should say. You can reverse engineer these structured trades, make them into something that you can use as a template to build out a trading plan. Many of us spend an inordinate amount of time trying to figure out, quote, setups. Well, setups are not the big thing. What's really important is understanding the condition of the market. If you can understand the condition of the market, then you might know where to apply, quote, a trade. If you don't know market mechanics and how it works, then having a setup is not going to do you much good, because setups are to be aligned with the condition. And certain processes or setups, if you want to call them that, I call them structured trades, are only qualified in certain conditions. So you need to differentiate that. So an important aspect of this whole thing is to know the condition of the market. So if we look at Friday's behavior, Friday was longs only to squeeze out shorts. Based on the behavior on Friday, I was anticipating that we would get continued selling today until I came in this morning and I looked at where we were relative to the ETH, and it certainly seemed we were leaving the early selling from the early ETH open behind, which set up a continuing squeeze. So while that wasn't in my trade plan, which doesn't really matter, my plan doesn't matter really. Once something changes, then I have to change with it. Now, here's an important thing to note. This is called the naked volume point of control. This is the retail price from Friday. Retail really means highest volume. And in the Trader Lab, and I'm only going to discuss structured trades here, which are fundamental trades you can work on if you choose. This is an important level. What it says is if we open and we test it and it's too low, we can spring away from it. And that would set up yesterday's high, Friday's high, because there's going to be buy stops above it. So my first trade was to be looking for this area to take longs. So let's take a look. By the way, if you're in YouTube, please post. And I want to mention I am in Costa Rica and I'm streaming off a very unstable infrastructure here. So if I drop out, I'll do my best to come back. Kind of questionable, of course. So let's see. So if you have questions, please post them. I'll do my best. So the market opens, and my first trade I'm looking for is for a test of this area for longs. That's a structured trade. I'm only discussing structured trades here. Now, as you develop as a trader, there's going to be other trades that you will, but this is kind of a way to, first of all, get a primary understanding of something called context and auction mechanics. The market's an auction. Basically, what it's trying to do is figure out what's too high, what's too low. The other joy of this environment that we operate in is there's always two sides, of course, on each side of the trade. There's the longs, so if the market gets long, we're going to have sell stops under those buyers. If the market gets short, we're going to have buy stops above them. So the reason we went up on Friday is basically the market was short. So you get your buyers, you get your squeeze, and we got into the stops above Thursday's high, Wednesday, and Tuesday's highs. That's where the fuel was, and those were the targets for Friday. That worked out really well for us in Trader Lab. It was longs only, at least primarily, unless you're a counter trade trader. Now, today was a whole different thing. And, today was, as I said, for me, it was a surprise in the sense of when I went to bed last night, I was looking at the ETH and it looked like we were continuing the selling. And then, of course, that's trading. Again, that changed. So the first long for me would be down in this area, looking to get long. So that trade did not materialize as a structured trade. Now, let's go take a look at a couple other elements here. One moment. Guys, are you able to hear me? Just want to make sure I got audio going here. Uh, it's good. Okay, thanks, Stoffel. Yeah, Malik, if you go on, I'm getting a question just the resets on SVP. I posted in TraderLab. If you did the rollover, and you can see I'm quoting the June contract today, you must check all of your reset times. When for whatever reason, when you roll, some automatically reset and others somehow get off by an hour. So all add-ons, all profiles, and here's where the reset is. So here, reset configuration. Mine is set at time, and make sure you have it at your RTH open. So I'm set to Central Standard Time, even though there's no daylight savings time here in Costa Rica. So check everything, all add-ons, everything. The full session profile for me is 5. Central Standard Time, so same thing, reset configuration 1700. And it's at time, not session start, at specific time. I hope that answers your question, Malik. And if you want the session volume profile to show, you have to check it where here, show POC on chart, whatever you want to see. There you go. Hope that answers your question. And again, if you're at YouTube, please post your questions. So, RTH open, developing volume point and control, yellow line. Market comes down. My first trade is down here. I didn't get one. Now, not here anyway. So we get our sellers. Now I'm looking at this, and all I'm doing is I'm saying, well, okay, come on, And we opened here. This is settlement. So statistically, there's a high probability of checking the settlement price, checking this, and then whichever way she goes, as they say. This is very aggressive buying. And this is resistance right here. As soon as we break above it, this becomes support. I have to say this is a pretty aggressive entry. It would be here, but this is really a little bit more advanced because for most traders, when you see this kind of aggression, this is definitely out of the, it's different behavior. And you need to develop some experience to recognize. In other words, when you're seeing this kind of thing, this is kind of what we might be looking for. This and this range, that is a change in behavior. That is an impulsive move. An impulse means an aggressive move. It is outside of the typical harmonic. It is one direction. So a big buyer showed up here. So then how do we get into this thing? Well, you have a variable high volume node sitting there and there. And again, this is advanced concept. And as a structured trade, I would say most traders would not, depending on your time in, would not take this trade. So let's assume we didn't take it. And then it's the off to the races move. Now, yesterday's high is also a potential target, and we blow right through it. So I'm going to say, depending on your trade plan, and for structured trades, there was no trade. Just have to tell you the way it is. So now it's patience. VPOC migration. VPOC migration suggests that this is the new retail price. So this is really bullish behavior on an intraday basis. And like I say, it's not anticipated by me. I don't personally get too concerned about things I don't anticipate because that means I'm trying to predict something, and that is not a solution for me. I just work on alignment. So this is the new retail price, VPOC migration. Now in the Trader Lab, we have a structured trade, and hold on right now. And that's called VPOC migration. So when you get VPOC migration, there's two possibilities. You can push off, you can reject it and retrace. So this is right here, what we have right here is a consolidation. We have a new retail price. What that is suggesting is, since we're away from this distribution, is that this is too low. We're above mid and VWAP. This is the new retail price. And as far as we know, we're going north. Don't know where, not our job. This sets up a long. The long could be entered here. Let me show it to you. This is a little more, I think this, for developing traders, this is a harder environment to operate in because of speed and locations. Here's what's important about this. Here, let me move this over a little bit. I like to draw these boxes really just to help you see structure. And this is what I'm doing. I'm outlining this distribution. This is a distribution. What it is sellers are here, buyers are here, the volume is in the middle. So it's basically, it's an auction. This is what the market is. Now, when the market's moving directionally, it's out of balance, and it's just seeking a price, like what's too high? I don't know. So when we pause, though, it's where the sellers and buyers kind of get to square off. And then are we going to break down from here or break up? Well, the trend's up. So when we break up out of this consolidation, this becomes support. The reason it's support is the sellers were here, the buyers are here. You can see the sellers here, and then the buyers take control here. This is where the sellers were. This is your entry, and your job's to get risk neutral. Your stop would be under here, if that's your trade. Now, let's keep going. So you get risk neutral, and then now as far as targets go, I really didn't have any target up here. So, but this is a structured trade, but I don't have any target. So the thing is, let me see, let me look a little further up here. My next target is going to be up here at 57.40. It seems a bit of a reach, but that's the target. So you have your long, you get risk neutral, and then manage the trade. Now, as far as trade management goes, how do you manage a trade? Well, we know this is where the long was, and your support is here and there. You can kind of see it holds the top of this. And what would happen here is you get taken out of the trade. You'd get something out of it, but you'd be gone. Now, right here, we see a sweep. And often what I like to see at a sweep is, are we going to now counter rotate? And if it doesn't do it, it doesn't do it. It's not a mechanical, nothing is mechanical in trading. Let's see if we get the bounce. We don't get the bounce. Now, we have another trade in Trader Lab called VWAP to VPOC. It's also mid to VPOC. So there's two possibilities. Now, let's come back over here. Down here, we had an auction. In the middle of this auction, you can see there's volume. Let me show it to you. And it's over here because the market paused. Same as that. Same thing. So what I'm attempting to do here is show you a consistent process in a random environment. So let me just put this out here so you can see it. And all I do is I bracket the edges. So it'd be sellers are here, buyers are here, and then the buyers took control. You see the buyers are above these guys, and there's high volume sitting right in the middle of this thing. Let's put a little line in there so we can see it. Okay. So there's your support, there's your break, and then we do the same thing again. So that's that. So now, once we come under here, we have the VWAP and we have the mid. So let's look now on the retracements. And let's think about why. If the market pauses, it's what you guys think of it. It is a consolidation. It's a fight. It's no different than this. So we had it here. Buyers are in control. So there's a couple possibilities. Up here, if we come back here, and this is still too low, we can continue higher. If we fall through it, then we have the next area below. So let's look. I'm going to move this all the way to the right. So since this doesn't extend on its own, I have to move it. I suspect Bookmap will be making an adjustment so we can actually do that. So the high volume is here. The outside edge is here. Let's see. Now there's two possibilities here. We have a VWAP, the VPOC, and we have a bid. So we have two locations for structured trades right here. So now right here you come to VWAP. Let's look at this. Micro high volume structure is here. Your consolidation would be here. This is a trigger. If you could, you'd be trying to enter here or here, but I don't know if you'd be able to enter here, to tell you the truth, because it was too fast. So I can't say whether or not anyone would be able to take this. I couldn't, only because once I'm getting ready to push the plunger, it's already failing. So I can't say what would happen here. I would not be able to enter this. I would have tried, but right here, when I see it breaking through here, I don't have a trade. I need it to kind of come out of here at the least. Hold this, didn't do it. So right here, it's already failed. So there's no long. But if you took a long, you have to then work on your triggers and see if this was a valid trigger for you. The next location is going to be the consolidation that I just showed you. And we're coming down to this. And this was the last area or last distribution that was too low. And then looking again. And here's another piece. We're outside of yesterday's range. So as long as I'm above yesterday's high, and the ETH high, then I'm out here. I'm looking for longs still. So mid is the next place. Mid, break high, test, buyers. Now again, if you can't enter in this, and by the time it moves up here, it's outside of your risk parameter, and you might be able to get in over here, you're looking at over 4 points. If it doesn't fit, you don't have a trade. The yellow reddish trace marks. I'm not sure what you're talking about. Anyway, let me finish this here and I'll see if I understand what you're asking me. So this is a long, again, very difficult to get into this because of here. It might be outside of your risk parameters. I will tell you that there were not a lot of trades in the structured world that I could really see here today. VPOC migration. Okay, now what this is saying is there's more volume here to down here. Now don't forget it's rollover. So this is not exactly, and for myself, quite back in years ago, I wouldn't trade rollover. I just would take the day off and not think about it too much. And there's a lot of traders that don't trade rollover at all. I mean, they won't even trade this week. I always found that a bit extreme, but because I do trade, but the first day, like a Monday, I would track the volume always, and I don't want to trade in a very thin market. And you can see over here the depth is, well, in the 30s. That's kind of light for ES, or almost in NQ depth. I can only imagine what the NQ is like. It must have 3 contracts per price. This is now our support level. It's a variable high volume node. We come down here. There's a potential long from there to there. This is a support level right here. We check it here. We check it here. Break below it. Nothing to do. There's just nothing going on here. I found this very erratic and it was not working well. I do suspect a lot of that has to do with rollover. Let's see. Back to support over here. Again, I don't think these are trades that developing traders ought to take. Volatility is very high in the markets then. So, and I don't know exactly how this thing's structured in the March. I don't have it. I can't look at it. No. Wish I had more for you, but the other thing is if the trades don't show, I don't trade them. And if you don't have trades that fit in this, then you should not be trading. You should just for the trades. And if you don't have a trade, you don't trade. Certainly behave like quite a squeeze. Yeah, I really don't have anything here. I mean, I can't pull rabbits out of the hat, So, but and I only focus on structured trades here. More advanced traders can trade this because they're going to have developed the competence to read it. That comes from a lot of screen time and practice. This kind of sets up. You can kind of see this kind of stuff here, but testing back in Friday's range. So don't have much to go over here. We'll just try to take this as it comes now in real time. What was that question, by the way? I'm not sure. Candle dots, crowdies. I'm not sure. Are you talking about this? These bracketing algo? Is that what you're referring to? Whole cool. If it is, that's in the front month. And TraderMap Lite is a filter that you can apply. It works on ESNQ, I think YM, R2Y, and gets rid of that stuff so you can kind of see what's really important. But I'm not sure that's what you're referring to. A target on shorts is this, if you have a short. By the way, if you're visiting on YouTube, this is the Trader Lab. A lot going on in here. So you guys are all invited if you're visiting on YouTube. Pretty great community of serious traders. A lot of charts, a lot of conversation, discussion of trades, sharing of ideas. It's a community of traders, and the idea of Trader Lab is to help you build out the business side of trading. There isn't any one way to trade. This is a primer webinar I did. It's got about 32,000 views. It gives you a high-level overview of what the business actually is. This one, I planned, I saw, I traded, is a overview of the entire process on a trading day. So it's one thing, the primer talks more conceptual about it, a little bit about my background from the professional side, my journey through indicator world, because when I started in 1980, indicators were a new thing. You know, we didn't have computers, we didn't have the internet. You had to basically get a terminal. That was, and in fact, at the CBOT, what it was like an extension cord that was run up to Massachusetts, I forget where, to get live data. And it was very expensive. Even back then, it was over $700 a month, back in when money was still worth something. And then as Wells Wilder and all that came around. So what I did was, since this was all new, oscillators and all this kind of stuff, I tore them apart, researched them, wanted to understand them. So all this stuff kept coming, and they were, derivatives of moving averages, a lot of stuff, like stochastics. I shared an office with George Lane. He created stochastics. So I thought the Holy Grail had showed up. And, when you see something crossing over something, you think, oh, this is great. And back then, it was trend following. There was no day trading. So for me, my shortest term swing trade was swing trading, 2 to 3 day swings in the big S&Ps. So I kind of like the S&Ps, but previous to that, I traded everything. And I was managing assets across a broad spectrum. So, and then I went into system design. I just want you to know, I kind of went down all these roads. And because there was no information, buy a book, right? Well, that certainly didn't teach me how to trade. Give you a lot of ideas, and you take somebody else's statements and you buy them as truth. And they may be true or not, but they may not be your truth. It's no different than coming to Trader Lab. What I do or others do in Trader Lab may not resonate with you, and it may make no sense. What trading is about is finding what aligns with you, your truth. And the way to create truth is to do metrics, to find out what is it true for you. Trader Lab, the idea of it was to help traders understand what it is to have a trade plan and why it's important to know what you're going to do before it shows up. In the reality of trading, it's knowing where your trades will take place before they show up. And if you don't have a trade that's already vetted, then you don't have a trade. You just sit here and you're a tourist. It's hard for us to do that because when you see these rotations, your inclination is, how do I get that? But that's strictly psychology. That is primal wiring at work, and that will take you out of the business. The idea of this business is to just wait for your trades. You may find it very hard to do, because most do find it hard to do. Casinos, which is really our business model, if nobody comes to the table, they don't make up a new game. They just only play the games that they have vetted that have a statistical edge, and they just play them the same way. That's the whole idea of anchored inputs. So if you have an anchored input, it has to all fit, or else you don't have a trade. If you just feel compelled to do something, that's gambling. And the casinos aren't the gamblers, right? Even though the casinos pay the gamblers. So it's kind of interesting. If you step back from what you're attempting to do, and you're not in the business of predicting or confirmation, you're really in the business of waiting. This is pretty erratic. Just looking here. For me, I don't have any trades. I mean, not structured trades, I should say. You know, stuff like this is tradable, but that's a different thing. That's strictly isolated order flow phenomena. Uh, Coming back to settle is not an unreasonable thing. You've got your first hour's low here. There's going to be stops under here, and I do suspect at some point we might get there. But we're in a very much a two-sided trade. And the fact is the buyers are still pretty aggressive in here because the stops are sitting under here. And this does have a high probability. So if I was sitting on the short side, I'd be looking down here. So the fact we get this, it's just, this is a hard trade today, I think. A very nimble type of trade. And it's not respecting levels well. I suspect a lot of that has to do with rollover. How are we doing in Trader Lab? How are you guys doing over there? Let's see if we can get some activity here. Chances are we're going to come back here. I still don't have a trade here. Okay, watch this here. See if we come up here or if we counter rotate in here. Got our algos pretty active here. I do have some potential upside here, but this is very muddy for me to read it. It's not behaving in a manner that is in line with my trade plan, not completely, partially. This is a target up above, not a recommendation. So this area up here, if we come out the top, if we come out the bottom, then we have this and this. So it can do anything actually, but it is behaving a bit strange to me. So it's, and again, I don't know if that's because of rollover. So as a rotational trader, I certainly do see trades, but they're not structured. This. And you're looking for this, but it's not structured. So I can show you the structure though. I think I'll do that so you can get some ideas. So this, if you look at this, before I go over to that one, let's look at this one because they're really the same. So when you come up here, you see the sellers are here, the buyers are here. There's the trigger, there's the test. You come down, okay? And I would, if it was me, I'd be looking for the down here. Okay, that would be my target. Now we get the same behavior over here. Let's just throw our little box around this thing. It's consolidation. So whenever I get consolidations, I'm always looking at them. Of course, I'm not drawing boxes around them, but I'm looking at them because of what they represent. So, and in here is where the volume is. So chop, 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 break high, mid, pull back. Now, at this point, if you were on the short side, this trade does not fail the short. Now, let me go one other side. When we come here, you could cover the short because it's a buy trigger, or your stop would be up here and you'd be looking for it to continue down to our target. And this is your support. So resist. Now, right here, it makes sense to get out of the trade or take a long, but let's assume you're just going to exit the trade. If you took a long, you're looking for this. Now, this is called VPOC migration. Two possibilities. We push off from here, then we're back on this one. If we keep going, we're coming back here. That's the possibilities right now with this. What this is saying in the auction is that potentially this is too high. So the possibilities are we check it to be sure, or we begin accepting this price and we can come back. We can accept this price and roll around here. We can come up here and check this price, or if we reject this area, then we are coming back to this one. This is left over from Friday. This is developing. They act the same way. They're magnets, so the market tends to come back. So the target on this one is going to be up here, not a recommendation. And if we break under here and test from below and we can't get above it, it sets up that. And we do have the first hour's high or low open. There's over 90% probability, past performance not indicative of future results, that we take out either first hour's high or low. So pick one. Is the trading volume split? Justin, I'm not sure what you're asking me. It rolls over. It gradually moves. On the CME website, you can see the volume, a volume plot as it starts switching. It'll be pretty much done by Thursday. So it's just these couple of days, and Monday especially, today especially, it's light. I depending on the size I used to trade, I would not trade on, like today, I would not be trading. But for my own account, yeah, I would trade this. But I also got to have trades. And in here, there's not a lot of trades for me. It's almost like being a subway purse snatcher today for me. You know, I just get in, get a rotation, get out, but it's not what most traders should do. Most traders probably should not be trading today in this contract. So this is too high, and this is too high, and we start coming down, then we are, again, putting this on the hit parade. And let's see what's below here, just in case. Well, 65, maybe. That's pretty far outside, though. But this I think is a pretty good probability. The 82-ish Friday's naked VPOC, and then maybe 72. I can't speak to this one because anything is possible. So let's see what it does. You guys have questions, throw them in there. And if you're visiting in YouTube, you can use the link down there in the bottom of YouTube if you want to visit TraderLab. It's a terrific community. There's no cost for it. It's about the business of trading. If you're interested in the business, you might want to visit TraderLab. It's in fact, over the weekend, there were some great posts about trade plans, trade methodologies, understanding the auction, how the market works. There's a lot of sharing going on in there. It's a community to help each other. We're pulling each other up by our bootstraps kind of thing. Doesn't matter how long you've been trading. I'm trading 45 years, and I'm always looking to get better. This is a business where you're never there. You're always trying to research, think about things. What can you do different, or get an idea for a trade, and then research it, throw it away, or get something out of it and go, hey, that's pretty interesting. Let me take that and put it over here, kind of thing. So, and there's a lot of sharing. So, the idea of the Trader Lab is to leverage the experience of all the participants so we can all do better. So if you're interested in that kind of community, Trader Lab might be a place you want to stop by. And I should mention, if you haven't visited not only the Trader Lab, but the Bookmap Discord server, there's a lot of additional education. There's no cost for any of it. Large cap, small cap stocks, options, crypto, order flow, of course, with a high tier tool like Bookmap. Market maker behavior, algorithmic behavior, a lot more. Understanding really what this is all about. Why would you even want an order flow tool? Most of us grow up on indicators. In fact, I did a webinar called Stuck in Trader Groundhog Day. That's where you wake up doing the same thing, getting excited, thinking now that it all fits better, and that's exactly what it is, fitting. And then you still get the same result. Well, you're welcome, but glad to hear you're green in all accounts. I think one of the things that's really hard for us is to sit and wait. Because your mind is going to look at rotations and go, I could have. I could have had this. Look at that. If I just would have done this. I knew it was going to go down. Yeah, I know. We all know what it's going to do. Especially when they work. What we don't think about is the ones that I knew it was going to do, and it does the opposite, and then you take a loss. Your mind does not remember those. It's this. So remember what we're looking at down here. And it's not a recommendation. We're looking at this. So what is the language of the market? Too high. What happened over here? Not going to pay that. Break low. Where's the stops? All these longs are in the market. Where's their stops? Under the low of the day. Where do you think we might go? Take a wild guess. And it is a guess, but it might be a good one. Mike Trader Lab, Bookmap Trader Lab. Use the link in the bottom of YouTube, Mike. It's exclusive to the Bookmap server. It's not available elsewhere. And there's no cost for it. Trader Lab's been around for a couple of years, I guess about 3 years. Bookmap asked me if I would do it. And I think the part for me, the reason I do it is my learning curve was horrendous. When I started, there were no off-floor traders. All my friends were floor traders. So, and technical analysis, hard to imagine because it's so common today, everybody, but back in the Stone Age, when I started 1980, it was all fundamental inputs. Their technical analysis was in its infancy, at least indicator-based, math-based. Previous to that, it was classical bar charting. When I first started learning trading, it was at CME, and it was basically measured moves, head and shoulders, that kind of stuff. So I thought that's what trading was. And the fallacy, and when I had to think about this many years later, was I started out with measured moves. And the thing about a measured move, when we measure something, we are predicting where the market's going to go. So I came into the business with the ideas about being able to predict something. So yeah, it's going to go here, it's going to go there, and somehow having this confidence of what it was going to do, when of course it has nothing to do with what it's going to do. So I went down this path of looking for confirmation and certainty, because measured moves, right? Certainty. At least that's kind of what you think, because you look at all the textbooks at the time. They would show all these examples. It was stocks, by the way, because grain, futures were not really a thing. That it was grains. Futures were actually what they were actually intended for. So it was hedging processes. So when I first came into business, actually, it was more interested in hedging than it was speculation. So a long time ago. So it was fundamentals, and technical analysis, as we know it today, was in its infancy. We didn't have computers or an internet, so it was looked down on as voodoo. I mean, it was really not a popular thing. It was really derided by the regular trading community, the analysts, because it was all reports. Trading Places, that movie with Dan Aykroyd, the crop report for the juice. So that was kind of what it was all about. Ben, would I only look for a short? No, Ben, I wouldn't be looking for a short. It's already a short. Now, the idea right here is the buyers were here. This is your support right here, Ben. So this is support. This is your resistance now. We've already tested this and we're below it. That suggests the possibility now to come back and test. This was the last support area. So it's down here and this. So here and here. And then if we get below this, down here and maybe out the bottom. So if someone got short, they have to be managing their trade. And that's all vetted. So you have to know what you'll do before you do it. The thing about trading is that if you have to ask yourself, what should I do? Then you don't have a trade plan. The idea of the trade plan is that it makes all the decisions outside of the market. You've made the decisions of what you will do, and it's based on what you determine gives you a statistical edge. That work is done outside of trading hours. Then you bring this plan here to the market, which is random, and then you apply it and you wait for your trades. If this is a structured trade, you take your trade. Then you get risk neutral, if that's part of your plan, and manage the trade. You get taken out of the trade, then the trade's over, and that's the end of it. It's not any deeper than that. I understand, for all of us, by the way, that we want to figure out, how can I sell this, the high of whatever, and how can I get out at the bottom? It's not realistic, because we don't know where the high or the bottom of anything is until after the fact. That doesn't do us any good in this business. Hope that makes sense. Yeah, JJ Marks. The fundamentalists did not like the tech. Nope. It was kind of an argument between the fundamentalists. But back in the day, it was just fundamentals, reports. And then the market would auction. So it's not, I mean, today we have tools that we didn't have back then. We didn't have domes, we didn't have volume, we didn't have anything. So before there was real volume, there was something called on balance volume, which basically took ticks and added them together, and it was a vertical representation of volume based on the number of ticks. So that was pretty exciting. I know when I shared the office with George Lane, and he created stochastics. When I first saw that, which was an early oscillator, I really thought it was the Holy Grail. I didn't know enough to know, what you don't know. It is you don't know what you don't know. So when you see something and a line crosses over something, and then you do it in a couple of different time frames, and you try to line them up so they're all leaning the same way. It seems so simple, doesn't it? Why would trading be simple like that? It isn't, but somehow we think it might be. So then it's, let me get the right time frame and the right bunch of indicators and then the right tweaks, and you go on your merry way. Well, that's why I did a webinar called Trader Groundhog Day, where you curve fit, throw a lot of spaghetti against the wall, and keep waking up in the same place. That was me. So when Bookmap asked me, about doing this, I just remember how miserable my learning curve was. Part of it was there was no information. I mean, the only alternative I had was go to a seminar and pay a ridiculous amount of money, which I did, and buy books. Bought every book there was. Didn't change anything. That's Trader Groundhog Day. I also found that you can't take anybody's, you can't overlay somebody else's stuff. Even here in Trader Lab, what I share, it's not plug and play. You actually have to learn how to trade. And that's going to require a substantial amount of work in order to learn to understand what's going on here. And a lot of times it makes no sense because it's random. So, but there are times when it does make sense because you've seen it before and you understand the behavior of the participants. For example, the short, where are the stops? Market tends to go where the fuel is. Stops are under here. So at some point, I'm going to ask you this. You, I mean the collective you. Do you want to be long now? Or do you think you want to be short? Do you want to be buying this dip, or like these guys did? Or do you want to be short, and do you want to be going for the stops that are under here, and under there? That's market mechanics. And it doesn't mean the market won't make a new high for the day and keep going, that's not our job. We can't predict it, but we can anticipate how the market works and where behavior might take place. So if we can anticipate it, then which way would you be leaning? Tom, I'm not sure what you're asking me about rollover. Rollover happens this week. The volume shifts from the SEP to the June. Usually on Monday, it's still pretty thin, but you can track the pace of the roll on the CME website if you're trading ES. It gets pretty well done by midweek Thursday, Wednesday, Thursday, but it's still tradable. Monday is I think the toughest day for trading the new contract. It's fairly thin, workable. I mean, if you think about the the volume in the NQ, this is like a heavy day of trading in the NQ. I mean, if you get a depth of market like this in the NQ, you'd throw a party any day. Yeah, J.J. Marks. Yeah. So you learned stochastics. What'd you end up doing with that? VPOC migration, suggesting that the retail price, where the volume is. Remember, trading is shopping. So what the shoppers are saying is where the location above us is too high, too high, too high. Still looking for this, not a trade recommendation. And then out the bottom. Yeah, George looked like Santa Claus. And then, when oscillators were so interesting because they look really good. I built my own oscillators and then eventually I built trading systems. And I took basically a lot of the concepts and then created my own hybrids and other things, a lot of other stuff. So, and I thought more would give you more certainty. And of course, when with a system, um, in fact, I early on I worked with Ralph and Bill Cruz uh, out of Miami. Those guys, they're the guys who created Omega Research TradeStation. But before it was TradeStation, um, they created a end of day product called System Writer. So I had System Writer, and it was very expensive. Then you had to buy data. You really couldn't get live data. Very hard. It was a whole different world naturally. So you buy data on floppy disks. Remember the floppy disk size of a small computer now. Anyway, that's where I started out. So it was pretty neat on a lot of levels. Learned a lot. Mostly spent my time chasing my tail because I always woke up in the same place, trader groundhog day. Uh, I didn't understand curve fitting. And back then, I got something called Commodity Magazine before they renamed it Futures. And they'd have articles and they'd show you indicators and stuff, in there and write up stuff. And so I'd, get that I don't remember if it was every week or every month. And see what was in there and then look at them and see what that looked. And because they always show you stuff that works, right? So I just spent years and years with that stuff. And it's all thrown away. I don't use any of it now. I guess what I use from all that is my experience from it to know what doesn't work and to have finally figured out why it doesn't work and then not do it. When I learned the market profile from J. Peter Stottlemyre, and I need to mention that because he actually taught it to me. And there was a thing called Market Logic School and it was licensed by CBOT. So as soon as it became available, I read about it. I read about auction market theory, and I was already doing aspects of it inadvertently. So I had already kind of getting the idea about what this was all about, but it gave me a more complete picture. But I was still using indicators, so I wasn't ready to let go of indicators. So I took what was called market profile, which was time-based, and tried to integrate it with my systems. That was a miserable, call it this way. It was didn't have a positive outcome, And like everything has winning trades, which is what keeps us trying to make it better. That's just a little bit about me. Anyway, let's see what we got going on here. Variable high volume node. Let's see what it does if we come back up here. We're still looking for this market to potentially come out either the top or the bottom. I'm leaning this way, and it's not a recommendation. It could do anything. But let's look at the language. If the volume and the price are moving together, which is what this is like shopping. If the price is too high, the buyers and sellers are not doing business here. They now lowered the price, and the buyers and sellers are interacting over here. if now there's more volume here for the day over here than there was there or there, it is saying this price is maybe too high. We can come back and check it, and if it's still too high, reject it and continue down. Support is in here and here. So we checked this. But this is now the new retail price. So subject to this and this are very important levels. So if we come up here, we got to see the reaction here. If we fall under here again, since we have the migration, we got to see if we push off and then go here. That's the objective anyway. Hope that makes some sense. So let's see what it does. I don't know about today, M7. Tom, I don't know what you're asking me about that, so come over to Trader Lab maybe. Yeah, Slaughterozzi, what is that? Ralph and Bill Cruz? Uh, yeah. I'll have to look at what you posted there. Yeah, Ralph and Bill, they actually created black box systems. That's how I first came across them. And the system writer, which is what I got, and I think it was in the mid 80s somewhere, before TradeStation, because they didn't have real-time product back then. The system writer was an end-of-day product. And it was the first time there was easy language. And that's why I got it, because the quote, easy language. And then you could call up functions. But it was still in a more developed, it was an early development model, if you will, of what the predecessor to what became TradeStation, which was a real-time product. And that's before they took their company public. I don't know, it was a big deal, I think in 87 or something. I don't remember when it was, where you could have bought stock in Omega Research. And then those guys are still probably sitting on a beach somewhere, sipping a pina colada. Gamma, you paid $3,000. I'm sure they were happy for that. Yeah, it was a very expensive product, but it was so innovative. That you could amateur like me could write code and take your ideas and back test them, and that's what I did. But I ended up creating systems, and I thought, and at the time, you know what it is, you start reading about all this stuff and about system design, and it was very logical. So I did that. I was always trying to, whatever was cutting edge, whatever was new out there, I would tear it apart. And you could throw a couple of years into ideas, and before you know it, a lot of years go by. And that's why I did a webinar, and it's in the Trader Lab, in the library of webinars on Trader Groundhog Day. Because I kept waking up with the same result, in spite of working hard, doing what I thought was the right thing to do, because it was in the literature, I mean, we'd all do whatever it takes, I think, to become a successful trader. And the thing that was very difficult was having the runs of winners. That thing where you go, hey, I got it now, I'm doing good. And then you don't change anything, and the market doesn't fit in the box you build for it. So over time, at least what I had to do is I had to throw away all the indicators. That was really hard to do. It's kind of like, something is familiar, even if it doesn't work, because it works intermittently, you're gonna try to make it work. I just got to make it better. If that's you, it's very normal. I mean, it's common, but I suspect you're going to find, for most of us, that doesn't work. And that's what most retail traders are doing. Everything everybody's doing with indicators, there's a new indicator. Doesn't matter. Everything's been gone through by everybody. And I can assure you, the hedge fund guys and the guys who are running real money, they're not using any of this stuff. This is what the retail crew does. They don't do that stuff. Guys I know who, at hedge funds and, real prop firms, they're not doing this. What most retail traders do, they're not doing it. So you got to ask yourself, if it was so good, why aren't they doing it? Because everybody's already been there, done that. So I always kind of figure you can learn from your experiences. I kind of think of it like tuition. We have all paid a lot of tuition to be in this business. Oh yeah, dongle. That's right, Gammo. They gave you a dongle. I forgot all about that. That's what they call those things, dongles. Gammo's mentioning that you could download the product, TradeStation, and then they gave you a dongle that you bought, and I don't know if they could turn it on or off. I don't remember anymore. I think you just had to buy it. Then you own the product. This is before a subscription, I think. Been too long, I can't remember. Yeah. Would a short off VWAP be a structured trade? No. Well, I'm sorry. Yeah, it would be. But put it this way, it could be. It's not a trade I would take. I mean, this is just not auctioning well. And part of that has to do with it being rollover. I mean, this is your outside edges out here. And this is just nasty. But we're in a rotational thing, this is not really, just doesn't, it's just, for me, this is just not a day to do much. One of the things you might find, which is probably not what any of us want to hear, if you don't have a trade that you've vetted right now in this environment, then you don't have a trade. You don't have nothing to do. You could just go to a movie or get your vacuum cleaner out like Furs does and run around a house with your vacuum. We have a trader in Trader Lab. He puts a trade on and vacuums. I find that interesting. Mark, if you go to bookmap.com, Mark, and watch the videos and webinars I show you on setting up Bookmap and how to adjust the heat map. But what's important here is this is TraderMap Lite. This is what the front month looks like. It's got bracketing algo, which is just noise. And it runs around. You can see what it does. It distorts the heat map. So Bookmap came up with a really great solution. And this is pretty much plug and play kind of thing. TraderMap Lite, it takes the front month contract, and then it filters out the garbage. And then I can adjust this to sensitivity. So if I want to see more, I can see more, which I do not want to see. So I keep it. I just want to see what stands out. And the other thing about liquidity, it's resting liquidity or liquidity that comes back in. This is all algorithmic, this stuff. The liquidity that matters to me is something that comes in the book and it stays in the book, not this kind of stuff. So it's not that important to me. But every trader, it's an integration. Now, if we trade into liquidity, what happens then is important. What happens as we approach liquidity? Does it pull? do we interact with it? So that's how you would use liquidity. And as far as the settings go on the heat map, you just right click on the screen and you can adjust it for, how much you want to see. You want more. You just kind of find the spot that gives you enough information, and so however you want to do that. So I'm kind of a minimalist. I try to see what I want to see, but I don't want to see too much. It's important to me to know that this is sitting around. But the thing with liquidity is just because it's sitting in a limit order book over here, and that's what the heat map is, limit order book. Except we're not trying to watch the dome, all the adds and pulls. We can kind of see it here. So I can concentrate where I need to be, which is right here. Support is here. Support is here. And I am suspecting, not a recommendation, we're going to come out under here at some point today. Because the volume point of control is moving lower, and this is shopping. Trading is shopping. So this is our new retail price. This is too high. This is too high. And what was too low? Friday, this was the retail price. And the way the auction tends to work is if we find too high, the market tends to come back and check what was too low. Right now it's there and stops are there. So this to me is, for me, short, not a recommendation. It can still take out the high of the day. You have to always be open to what might happen, not that it will. But I know that if the market's long, there's sell stops under the low of the day. So for me, that's my objective here. So Mark, I hope that helped you. Oh my goodness, Slaughterrazzi, you are something else. You're coming up with all this stuff. Huh. System writer, huh? I'm going to have to look at that stuff. It's been so long. Yeah, JJ Marks, that's true. JJ say we've been conditioned to be doing something to earn an hourly wage. So sitting and waiting to engage the auction is counter to our long-term wiring. Right, we need to be busy. Market is really behaving in a very interesting way and not typical, very rotational. This takes very active trade management if you're going to be active in this today. I'm glad I'm not trading today, to tell you the truth. I'd just be taking so many trades in this. And that's not my thing. I prefer to get in for larger swings. If I miss a big swing like this morning, and I don't have a way into it, then I feel emotionally triggered. And there's that voice in the back of the head. You need to do something. Come on, let's get some of this. Yeah, you can. And I hear the same now. When do you use rhythmic? Mike, I use rhythmic. Oh, great. See, POTUS is speaking, huh? Thanks. If you guys are visiting here today, today was not, for me, an optimal, you might say, trading environment. I think rollover is some of that. Some days we're very active here. Other times it is what it is. So Today's a pretty benign thing. You have to have good location if you're going to trade, always. I invite you to come to the Bookmap Discord Trade Lab community. If you're interested, there's a link at the bottom of YouTube. You can access the library of webinars. Also, there's 60 PDFs of structured trades you can download or reverse engineer, and there's the Trade Lab community, and there is no cost for that. Might want to check it out. Support. Still nothing in here. Nothing. Unless you have a short-term rotational plan. I mean, there is some good range in there, but you need to be able to recognize this behavior, and if it's not at a location, you don't have a trade. Just the way it is. Stops are going to be sitting above the VWAP, and we have to look up here. Let's see what happens here. Often what we see is mechanical selling at the VWAP. Personally, I don't. If it's the first touch is always for me the place to do a trade. We come back to it. It's a little bit different because there's going to be stops sitting here. So I'm not a mechanical trader. So, like for example here, I anticipate retail trader behavior, mechanical traders, and don't forget they get paid. Gamblers get paid. It's not about right or wrong. It's about trade plan. So. If we get mechanical traders here, there's a reasonable chance we're going to take them out and take these guys out. Buy stops are sitting above here. This is potentially your mechanical traders. You know, they just see a line on a chart and think but there's more to it, right? And now, if we can squeeze, if we want to look now and see, this is the area that I would be observing for behavior. Out here, and don't forget we can still come out. Because this is kind of what we're trading at the moment. So we only got a couple of minutes, so we'll see what happens here. Looking for stops. Looks like we're getting some stops now. Let's watch it. And this is not a trade recommendation. We're just going to watch the behavior. If you have final questions, post them. I got about 5 minutes. And please hit a like if you, I know today's kind of, Gemo, are you referring to Slaughterozzi's post on System Writer? Yeah, I'll have to go take a look at that. Yeah, System Writer. We're talking cutting edge here. And I remember I had to get a special computer for it. It was a 286. If you remember when I think it was Intel was coming out with their processors, 286 was a big deal. And then they went to a 386, and I had to get one of those. I don't remember how much RAM those things had. It might have been, I don't even know. It was so low. My first computer was an Apple IIe. George Lane had an Apple I. So he had a 1, I had a 2e. That was high tech. Indicator combos and tweaking. Yeah. Oh, you had a 486. Ah. Yeah, right. Then up the Pentium. Well, I had the 286. And I had to get that so I could run System Writer. And before that, it was the Apple IIe. So I was doing indicators on an Apple IIe, basically using, I'm trying to remember what it was, some kind of rudimentary Excel or whatever it was. I can't remember, but it was uh, just running the numbers, derivatives of moving averages, really. 16K of RAM. Yeah. 1994. Oh, yeah. Well, I was doing it in the mid 1980s with that. The red lines above and beyond. I'm not sure. Well, these are sell icebergs. That's buy stops, if that's what you're asking. Sell stops, buy icebergs. Sell icebergs, buy stops. So this is your stops coming out, 30 stops, right up to our variable high volume node. This is where we have to right here be looking for a short, not a recommendation. This is the area, and we can still push outside up to here. And these are not trade recommendations. I'm just saying, give you something to think about. So if this is too high, we might come back here. If we come back here, then we can potentially fall out the bottom. Not a recommendation. This is a tough read. Today's kind of strange. I suspect a lot of that has to do with the volume. Final questions, guys. Oh, an Apple Mac, high tech. Guys, please give a like. Hope you got something for today. There wasn't a lot in structured trading here that I could really share with you. I think, one of the most important things about trading is just to be patient, wait for your trades. The idea of trade plan is to know where you're going to trade before the market gets there. It's not to be sitting here glued to the screen and going, is that a buy? Should I, can I sell that? If you're doing that, you're in a video game. You're not in the business. Then you might as well go to casino and get the ticket to the buffet while you're at it and drink and get some cocktails because you're going to need them. The business of trading is just waiting for your trade. That's really it. And if you don't have a trade, your job is not to trade because that's how you protect your capital. So when things are in alignment, you can do your job and get paid. Because if you're going to take risk, it should only be when you have an edge. I don't know about you. Casinos aren't making games up if they get bored. They seem to do pretty well. So that's the business we're actually in, is gaming. If you're interested in learning about the business, developing trade plans, I have 60 PDFs of structured trades you can use as templates to reverse engineer, accelerate your growth. But be prepared. If you want to be in this business, you're going to really need to shed what you've been doing if it hasn't been working. And everybody has winning trades. That's the grand illusion. Winning trades. If you flip the coin, you'd have a winning trade. We all have winning trades. So it's not the issue. It's about an edge. The way you extract dollars over time in an environment that's 100% random. It's not looking for certainty, but looking for statistical probabilities. It's very different than what most retail traders think the business is. If you're interested in learning about the business, remember, this is our area right there. Okay. This is a Trader Lab short right here. 2 there. And then we're looking for out the bottom. Not a recommendation. Please give a like. Thanks again for visiting. Use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. There's no cost. I look forward to meeting you guys there. It's a great community, a lot of resources, a lot of support, a lot of camaraderie, and hopefully we'll see you there. Thanks again, guys. Thanks for visiting Trader Lab today. If you're going to trade this front contract today, just be conscious that it's thin and stops could get skidded, especially if you're trading NQ, then you are really out there if you're trading the front month because it's going to be thin. Thanks again. Don't forget to hit the like. Look forward to seeing you guys soon.